Good morning. Morning, everyone. It's Thursday, April 23rd, 2026. New day, fresh start. All right, welcome to the Pitbull Traders Morning Game Plan. I'm your host, Manny. The purpose of this show is simple. Live futures trading, real-time technical analysis, and actionable trade setups. All with a focus on trader education and the mindset designed to drive consistent profitability. Every morning we come in with one goal, to build out the structure before the open so we're operating with the dominant forces of the day. We're not guessing and we're not chasing. All right, guys, so let's map it out, or guys and gals. Yeah, Stuart, I think that was, I had some music on before, prior to the open. All right, let's get into it, right? So we had this big liquidation break last night at about 8 o'clock. And I think there's something to this that I want to share, but let's just map out. Let's start off with daily chart, right? And review what we said yesterday. Let me get a little bit more granular on this and go down to the 4 hour. We cover the higher time frame stuff, and then we can move on. All right, so we've been watching the rally from the 63.53 low, the straight line vertical move to new highs, an amazing move. And yesterday let's see, hang on a second. Hang tight. Okay. Sorry about that. So yesterday I highlighted how the measured, and I walked through the progression of this move higher. Okay, so we made the 63.53 low. We had the impulsive move higher that brought us to about 66.50, and then we had a halfway pull. We pulled back half of that move to the 50% retracement, and then a continuation of the trend. Okay, and we can see that that's highlighted here on the chart with the Fibonacci extensions. All right, so we had a wave one up, pullback, bull showed up, took us higher, continuation of the trend. Then we had followed by that first measured move that completed a measured move target. We went sideways for a few days. We gapped down on Sunday here, and then bull showed up again. They bought the dip, and it was a beeline straight to new highs for our wave three high. Okay. So now, ever since that move higher, the market's been kind of going sideways. All right, which makes sense, right? We're at new all-time highs. We had a straight line vertical move higher, and now the market is just kind of going sideways. You can even with last night's noise, you can see how it looks on the 4-hour, kind of reduces a lot of that noise, where this distribution here at new highs looks a lot like this one here. So the one thing that we want to be mindful of is, if they alert for, is, are we going to see a pullback in prices or a pullback in time? Thus far, what we're seeing is a pullback in time. So kind of like a sideways movement. Hey, good morning, Tom. It's kind of like a sideways movement until the market decides what's the next play. However, one thing that I want to point out is that because of the nature of Elliott Wave, I think that the market is certainly capable of seeing lower prices. And we highlighted yesterday, and we'll continue to highlight possible areas where we can pull back to. And in the case of that pullback, in the event of that pullback, I should say, I think that the first thing we want to, so first off, in order to have an hourly trend change, right, what we would want to see is the hourly trend change wouldn't change significantly until we got below 6,900, so the prior high. Okay. However, we have to be mindful of this low here, which was the 70.85 low. Okay. So is it possible that we are going to see a deeper retracement? We'll see. But the first area that we want to note that holds the potential of support for a higher low would be the prior all-time high at 7143, I believe. Sorry, hang on. I should know this. Okay, yeah, 70. Okay, so let's frame it out at 70.35 to 70.45, right? That's the first area that the market could pull back to and reasonably find support and put in a higher low, and maybe we see a resumption of the trend towards higher targets up here at the 74 to 7,500 range. We're going to mark that 70.85 low, and we're going to keep that on our radar and frame that as part of our narrative. because it is possible that we test that low, bounce, come back down, and then we'll see maybe we'll get a test of the prior all-time high, or maybe even a test of the trend line that's in orange on the left-hand chart, or even as low as the blue trend line and test the prior high, the prior pivot high at 6,900. All right, so that covers the higher time frame analysis. So we have to be on alert. Let's use that 70.85 low as our bogey, as our bull bear line. You know, we may be in for a deeper retracement if the bears can push price down below 70.85 and gain a following. Then we can start earmarking or start looking for supports, and I think that gives us a good marker for are we going to start selling rips, or are we going to continue to buy dips? Until then, I think we have to remain on the bull side. All right, with that being said, let's look at what do we have in store for today. All right, so the first thing we always ask ourselves at the open is, what is the state of the overnight inventory, right? So how much of yesterday's volume, how much of the overnight volume was above or below prior day settlement? Okay, so yesterday price settled at 71.71. We closed basically right at the high. And thus, you can see at the Globex open at 71.63, we can safely assert that with this move lower that all of the inventory overnight was net short because it's below the settlement. However, given the nature of the overnight moves, I think that we have to say, hey, it's more neutral than short. All right. And the reason why we look for what is the condition of the overnight inventory is because typically when the overnight inventory is either all long or all short, what you typically see is a correction of that inventory at some time in the part of the morning session. So typically right off the open, you're going to see a correction of that inventory or a move counter to what that inventory was. So if the overnight inventory is 100% short, long, then we would look for a retracement of that overnight move and a correction of that inventory. On the other hand, if the overnight inventory is 100% short, then what we're looking for off the open is a correction of that inventory and a move higher. But looking at the chart, we can see that although 100% of the inventory was below the settlement, we're more neutral here because we sold down to 71.05 and we immediately bounced from 71.85 up to 71.55. Okay, so there's not much of an edge in the overnight inventory per se. All right, so what do we have going into this morning? All right, so let's cover the bullish argument, right? So say we're trading 71.59.50. What we do every day at the open is write down the opening print to use as a fulcrum for the day's price action. Assuming that we're trading 71.51, assuming that we open at 71.51, what could be in play? Okay, so if we open at 71.51 and we get a move higher, the first thing that we're going to want to monitor is the opening print of last night's Globex session, which is at 71.63. Okay, so do we get an opening drive higher that takes us through the Globex opening at 71.63 and subsequently over the overnight high? Then it's safe to assume that we should start looking for pullbacks to get long. Okay, so do we get an opening drive higher that gets through the Globex open as well as the overnight high? And interestingly enough, The overnight high is 71.69. Let's see. Hang on a second. Let me make sure I have this right. That doesn't look right to me. Hang tight. Hang tight. Let me just go with this. Okay, let me check this chart. Yep, okay. I was right. 71.69.50. Our settlement is 71.71, and yesterday's high is 71.73. That's I love when those areas are stacked like that, right? Because it gives us a good within a 4 or 5 point band. We're going to be able to quickly assert what the market's intention is. So the most bullish argument is that we beeline right through the Globex Open at 71.63, test the overnight high settlement and yesterday's high band at the top of this range, and we get a pullback that allows us to get long if those areas hold for a continuation of the Artemis move to the moon higher. That would be the most simple pathing, right? Because if we cut through those levels, we'll know the market's intention is really bullish and pullbacks are buyable, and that should yield a really nice trade. That would almost be too easy, right? All right. Say we open. Let's cover the bearish argument. So we open here 71.51. Yesterday's highest volume traded price, the volume point of control, is what we call it in market profile parlance, is 71.43. Yesterday's regular trading hours low is 71.41. So that's another good spot for us, right? Because we can frame out our day pretty simply in that if we get an opening drive and we beeline straight through those with strength and momentum, then we know a liquidation break is upon us, and we can start looking for pullbacks to that area, to 71.41, 71.43, maybe even as high as prior day's value area low at 71.48, and we can look for shorts that would ultimately target this low pivot here at 71.25. So if we get below yesterday's low, 71.41 and 71.43 with strength and momentum, and we'll know it because ES, when it sells quick and fast. There will be nary a blip there, and we can find a good spot with our backs up against a good risk marker and look for a short that gets us the move down to test that 71.25 pivot. And being that those levels are at 71.41, the risk to reward there justifies the trade. Another setup that we have to be on alert for is if we trade lower. Let's talk about the trap trades, right? We don't want to get short down here and get quickly clapped and get caught off sides as price looks below yesterday's low at 71.41, stalls out, and then quickly reclaims yesterday's low, puts in a higher low on the reclaim. Then we should be looking for long ideas or longs on pullbacks that will take us back up to test the Globex Open and maybe even the overnight high. All right, so we have an idea for the most bullish argument. We have an idea for the most bearish argument. We also have an idea for the trap trade. And we all know how much ES loves to trap traders, right? Let's talk about the bullish trap. So say we open, we immediately test yesterday's high settlement, and this band, this 5-point band, gives us a really good risk marker for the day to gauge the market's intention. Because if we come here and then we see that sideways move, right, where price is just unable to gain a following, it looks like every time it stabs up, it just comes right back down, and the market starts to go sideways for a bit. I think we need to interpret that as distribution, as a lack of buyer interest, and we need to be on alert. We need to be cautious for that move to lose steam and for it to unfold as a look above and fail. So quickly price gets above the band or tests the band, unable to gain a following, and we immediately retrace. Well, then what we should look for is, obviously we're going to write down the opening print, but given the state of the overnight move, we'll likely be far away from there if we're testing this band. But if we come back if we test above yesterday's high and the settlement, and then we come back into the overnight range or back below 71.69, then what we should be on alert for is a potential move that will get us back down to yesterday's volume point of control, or even as low as yesterday's low. So maybe we do a little bit of a sideways move, but ultimately it peters out. We get back into the overnight range, right? And then we can look for short ideas right up against there, with our risk marker being the pivot high that forms in that structure. We can look for short ideas that get us down into yesterday's value area, and maybe even potentially a move down to yesterday's low. All right, so we covered the most bullish argument. We covered the most bearish argument. We've also covered the trap trade, the bearish trap trade, or the open that takes us lower but ultimately fails. We also covered the bullish move that gets us that traps traders that traps long traders. Now let's cover the dreaded sideways day, right? So the first thing we need to be on alert for, because our overnight range is so wide, right? 71.05 is the low, 71.69 is the high. So 65-point overnight range. And while we know that our 96% setup can play well today, we also have to be on alert for the sideways move, right? So price opens, trades above the opening print, below the opening print, back above, and weaves it a few times. Now, let's watch that first 5-minute print, right? Because that first 5-minute print, if it's a doji or even a first 15-minute doji, that would be an early sign that the market of indecision, and that we might not get a strong or impulsive move in either direction. So if we go sideways and we're unable to test the Globex open or even the overnight high or the overnight low, then the best approach there is to watch the first half an hour trade go by until the market gives us better ideas of a directional move. All right. So I think that covers everything. We've got the most bullish argument. We've got the most bearish argument. We've got a bullish trap. We've got the bearish trap. And then we have the dreaded sideways day, right? I know we all hate that day. Interestingly enough, I want to state that this, ever since we got up here, this is starting to look more and more like distribution to me. Because I find it, I was looking for the news to try to find what caused this liquidation break. And I mean, if any of you guys know what caused it, let me know, because I couldn't find anything really that would that would cause this level of a break. So MK99 asks, Manny, what is an LB and F? An LB and F is a look below and fail. Look below and fail. So that's kind of that MK. That's kind of what I outlined. Where price kind of, yep, you're welcome. Kind of looks below the price, peters out, and my favorite kind of structure that develops on those guys is something like this, right? Where we come down, say we do a look below and fail of 71.25, this level. Where market comes down, right? Test below it, comes back up. It holds on the first one as resistance. We get a little bit lower, right? And then it comes right back up, right? So we trap. The market loves to trap, right? So it gets everybody short here on the break. It gets a little bit of a move lower, but ultimately what happens is we put in this kind of like an inverted, where market comes back up here, and then we kind of put in an inverted head and shoulders, right? Where we have a head, the head here, left shoulder, and right shoulder, right? I really love that because let me just draw it out a little bit better. Say this is our zone here. I love that setup because here. So we get to move down lower. Price breaches it, right? Everyone gets short on the pullback. We get a little bit for it, but ultimately it peters out. Price comes back up, down, and then ultimately reclaims it. So you have your left shoulder, your head, your right shoulder, and then I'm looking to get long on the break, on the reclaim of the level, or even on a trend line break of this structure here, right? So if we get, so we had a trend line break here, then I want to get long as soon as I want to get long right in here, right on a reclaim of the level, and I have my stop behind that higher low. Does that make sense, guys? Hope it does. Let me know. Drop a comment. Let me know if that makes sense to you guys. Hopefully, I framed it out. Because of the overnight move, I think we need to be on serious alert for a choppy two-way trade here at the open, because just simply because of the overnight range. I think the market might be a little indecisive here to open. So look out for that. Let me just get this email in here. Hang on. All right, there's our opening bell.
First pullback, take trade.
Let me write down the open print. Okay, so we opened at 71.52 quarter. $71.52 quarters are open. Watching this closely here. So thus far, 71.52 quarter open. We traded as low as 71.49.75. Be careful up here, guys. We want to be careful up here. Don't want anybody to get trapped, but so Stu asks, what number is that? I'm not sure what number you're referring to, Stu. Help me out here. So quick update for the folks watching on YouTube and for the guy, even for the guys in the pit. What you're looking at here on your screen on the left, on the right hand chart, there are two charts I'm demonstrating, and hopefully that's not too much. So what I have on the right hand chart is a 5-minute ES chart for the June contract. On this chart, I have a volume profile, a 24-hour volume profile here on the side. And I leave that on my screen so that I can have a good idea for the day's volume for the combined with the overnight session. On the left-hand chart, what we have is the same instrument, ES, except I have it on a 750 tick chart. And the reason for that is because of the auto execution or PTG algorithms that I run. They are designed to work on a tick chart. And if you don't know what a tick chart is, let me know. But I don't want to bore anyone with the minutia of, what tick charts are. But if you don't know, post a comment. All right, so immediately we have kind of petering out here at the highs a little bit. Okay, let's see. Let me get, my hat. I always forget the hat. All right, here we go. Let's go, millions. Millions are coming to me right now. Let's have a 5-figure day. All right, let's see. 71.52 quarter is our open. We traded as high as 71.57, and now we're moving lower. Another thing that we're going to focus on is I'm going to be listening for our institutional activity tracker or Spygate. I want to know. Always on alert for that. Again, so Spygate is an excellent tool, and everyone can, if anyone is interested in the Spygate, please go to mrtopstep.com. You can find it there. And for you guys trading evaluations, I mean, that's a great tool, right? Knowing what the institutions are doing and staying aligned with them can yield great benefits. Also, I mean, some of the tools we have, if they'll get you in a funded account in one trade. So look out for that. Go to mrtopstep.com. If not, go to pitbulltraders.com. You can find it there. All right. Hang tight, guys. Just gotta get to do this email here. Oh, quick programming note. We're going to be joined today by our resident crude crude expert. Reverie is going to be joining me today at about 10:15, 10:30. So look out for that. Just getting through that here. All right. We're testing that 24-hour the highest traded price over the last, since the 6 p.m. open is 71.57. You can see I have a long trade here, auto executed. The auto execution algorithm, and that's looking for its first target at 71.60. Just got that. So nice quick start to the day. Plus 5 points on that plus 4 points on that first target. And now we're looking for 71.65.75. All right. Let's see if we get that second target. It's always nice to start the day with a win. Obviously, right? It works wonders for the mindset. I was asked a question. It's a good time for it. I'm going to let the algorithm execute that trade. But hey, I was asked a question. I think it's a great time. Oh, okay. So we just hit that 71.62. That's going to be resistance, guys. Heads up, man. Hang on. I know that's resistance because I just drafted it this morning. Hang on. Yep, 71.62 to 65 is going to be a problem. Always a bit of a pickle. Let's see. Yeah, it's a nice little band up here. So I was asked a question. So I have two traders that I'm coaching, and one of them asked me. He said, "Hey, you know what? We were going over it. We were going over some stuff, and he asked me this morning. He said, "Hey, what are you looking at on the day?" And I told him, "All right, guy, look. This was earlier this morning. I had 71.32 as a support, and then beneath that, I had 71.70." For those interested, I put out trade setups every day. High probability zones. They typically get you 5 and 10 points on the first two, and the third target is typically a 15-point target. Those setups are designed to hit those three targets. It's an entire trade system designed around that, right? And I'll get more into that, the particulars about that trade system. So that trade system is designed that you only need. Okay, we just got some institutional activity, and heads up, guys. I want to make sure that you guys know I'm sharing the Spygate information for free this week. We're just kind of letting people know and get to know our tools. But Yeah, soon that's going to change. So just make sure you stay on alert. I want you guys to know what it's about. So just heard a croak, and that means that there's some program cell activity. Yeah. So really quickly, I was asked a question. So we were trading like 71.51, I think at the time, and I told him, I said, hey, I have a support at 71.30. Let's see, I put it out this morning, 71.32 to 71.36. And he said, all right, well, we're trading 71.50. Should I take the short to get there? And that was a great question, right? Because it's something that I learned early on, that I would have a support designed, I would have a support outlined, and because price wasn't there, I would figure, well, if price gets there, I'll take the long when it gets there. Why don't I just take the short? And so if you follow the logic of thinking there, it kind of assumes that support is going to get hit. So you kind of you take it, you're taking the short to the long, and that never works out well, because for a few different reasons. And the most important one is that you're taking a low probability trade to the higher probability trade. But even more so than that, it's really tough on mindset. And you know how much we like to dial in and key in on the mindset. So if you get into a short trade and you're taking the short to the long, right, you're going to have less fortitude to hold that short trade, because there's less planning behind it. You're kind of just being impatient and taking a low probability trade because you're not at your zone. Okay, so if you get the short and say, it goes against you a couple of points, you're going to be quick to cut it, because you're not going to understand why you took that trade. You're not going to have a good risk marker, and it's going to be a low probability outcome for you. Furthermore, say the trade does work, right? And the trade is working. Once you're arriving near your target zone or where you want to take the long, it's going to be a tough mental flip for you to exit a winning strong position, because the typical mindset at that point is that, hey, this position's running. I want to stick with what's working. I'm going to not covering it and flipping, which is very hard to do, and you end up missing the better trade. So the reasons why we don't want to take the long to the short, or in the same thinking, take the short to the long. This to be a good and successful trader, it requires discipline and it requires patience. And if you don't have that, which is it's a challenge for all of us, you need to work on developing it. There's just no way around it. You have to do the work. You have to develop the patience. If not, you're going to be constantly liquidity. You're going to be constantly donating money to the market, and you're going to be giving up your gains to more patient traders. All right. So heads up on that. Here's another thing I wanted to share you guys. So I was talking earlier about the setups that I put out in the morning. So those setups are different than the algorithms that I run, right? Those are my, I run several different strategies, and those setups are part of it. And those are daily actionable. Okay, we just had some activity going on. Those are, okay, coming into that high target now for a 10-point gain, which would be really nice. 71.65. Come on, fill me, baby. Let's go. Come on. Let's go. Don't stop. It's always the last few ticks that take the longest. So, back to the trade plan, guys. So those trade setups that I put on, I want to explain to you some of the design behind that. Okay, got it. Boom, got it. So that obviously, it's always nice to start with a win for the day. Sweet. All right, so back at it. So the trade system that I designed, right, that those setups are designed behind, there's math behind it. So those are high probability zones that have a 71% chance of getting you a 5-point. So the system is designed behind trading 3 contracts, and it's designed to take a 5-point first target, a 10-point second target, and a 15-point third target. And there's a reason for that. The areas that are on that sheet have a 71% probability of getting you to a 5-point target, but that's not good enough to make a system profitable. The system is designed to, if you hit the 5, 10, and 15-point targets, you only need a 33% win rate to make the system profitable. Okay? So it's reverse engineered behind a low win rate. So we need to find high probability zones that have a higher probability of getting us to the 3 targets. All right. If the system only hits its first 2 targets, which the historical results on that are that the system hits the first 2 targets. If I remember correctly, it only hits the first 2 targets 63% of the time. Sorry, it's the first 2 targets 67% of the time. But at that point, then we need a 61% win rate. So I don't want to bore you with the math or the minutia, but let's get back to the tape. Just wanted to explain that to you guys. All right, so we just tested above the overnight high, 69.50. Stay on alert right here. Quick read on the internals. 1-to-1 negative on the NYSE, 1-to-1 positive on the NASDAQ. We just traded 71.81, and we heard some croaks there, but watch 71.64. Watch 71.64 on a pullback here. On our time-based study, let's see what we're looking for today. All right, guys, heads up right here. If 71.64 fails to hold, okay, just held, 71.65 quarter just held. All right. We want to be on alert here for a look above and fail. Let it form. But that 71.71 high, hang on. Yeah. Okay. Went back down to test 71.64, guys. Watch out. Stay on alert here.
First pullback, take trade.
Okay. Yeah, guys, look above and fail, guys. Heads up. Look above and fail. We failed at that 64. A contract traded at the high. On the downside. Do me a favor, if you're watching on YouTube, please smash that like button, hit the subscribe button if you like what we're putting on here. Just that one click goes a long way. We're just getting started here. We're trying to add value. Again, we're trying to teach traders how to be consistently profitable. second here, a little bit of a distraction. Heads up. I'm just gonna give you guys a heads up as to what's going. So I have a sick kid at home. All right, right back up to retest the high. I have a sick kid and my wife's out of town, so that sucks. All right. Internals are negative. Internals are both squarely negative. We have to be on alert up here, guys. 23. Today is Series S1H. Cycle day 3. So on the clock, we are looking for an early high pivot. So those of you watching on YouTube, we have our private community. If you like what we're putting on here, go to pitbulltraders.com. You can sign up there. It's free to get in. Tons of great resources. Lots of experienced traders. It's a really good orbit to be in, especially if you're looking to develop consistent profitability. Right? We're not we're not a on giving you an account and setting you and letting you loose. We're more our focus is more on consistent profitability, trader education, and we have a ton of tools that are available to our members. I mean, honestly, if I'm trading an evaluation account and I'm looking to get that funded, I will, there's one trade that you can take consistently, if you trade the MIM at the end of the day, it's a 10, obviously if it sets up, but if you trade the MIM at the end of the day, you can, put on a sizable position right before the release. It's in the last 10 minutes. And I've gotten countless evaluations passed in the last 10 minutes. I mean, I think one day I got, I was copy trading and I got 5 accounts funded in the last 5 minutes of the day. I was ready for it. We kind of knew it, had an idea it would be a big MIM, and I smashed it. Got 5 accounts funded in one trade. It was like 5 minutes. Okay. Watch that look above and fail up here. Check the algorithms, make sure that we're in alignment up here. Yep. Okay, cool. Cool. All right. Going to be a big tell up here, guys, if we start to move lower. Again, I think, you can, as we outlined earlier, you can trade up against that 71.71. We are a little early for the time window, but again, price is everything, right? So I took it at 71.63 quarter, using that 71.71 as my backstop, 71.67 ish. Hey guys, this trade, this short trade, that it's got a really frothy target on it. Just heads up, all right. Heads up on that. It's got a really frothy target. I think we could even take out the early low down there at 71.4950. Tom asked if I post the timing guide. Did I? I thought I did. Thanks for the check on that. Here's the guide. Here's today's timing guide. Wait, today's cycle day 3, right? No, yeah. Here we go. Developing an agent that will post it every day for me, so I don't have to kind of get entangled with it. I worked on it a little bit last night. I'm also developing a kind of a package that will explain to people how to trade that system I was discussing this morning. That's like my point and click system. That's the one that I typically talk about when I'm trading with the guys in the room. All right, good move. Nice move here. Nice move here. Here we go. You heard the croaks, right? There we go. Large sell program, guys. Pretty big sell there. Again, we're offering that Spygate this week just so that any folks that are new can get a good idea for the tools that we have available to our members. All right, so I got 71.6275 short, looking for a first target of 71.5275. Coming into that now. From there, I'm looking for 47. No, I'm looking for 48.75. Big sell here, guys. All right, look above and fail up against that point. Nice trade. Nice trade. I hope some of you guys caught it. Yep, you're welcome. Do me a favor, if you're watching on YouTube and you like what we're doing here, guys, we have institutional grade tool. All right, got the first target on that trade, so nice. Well done. Hey, that was a classic look above and fail up there. Great trade, simple little trade. And it happens all the time. Nice. I'm glad, Easy Money. I hope you made some. Hope you made some coin on that. Good. Again, the purpose of this show is to educate, kind of share our experience. When Danny Riley, Mr. Top Step, when we started framing this out about a year ago, you got the second target on that one. So that's nice. Very good. Happy about that. It's nice day. Yesterday was kind of meh. I think I shared it with you guys that I had I don't know. I think I netted like $300 or $400. I mean, just enough to keep the lights on. I'm gonna keep them like that. All right, guys. So we have our AM high in place. Now let's look for our next time pivot. Again, that's posted in the Pitbull Traders chat. If you guys are watching on YouTube, want some more insight into that, go to the Pitbull Traders website, sign up there. You can get access to the Pitbull Traders chat for free, and a lot of these tools are being shared in there. Yes, yes, yeah. So Easy Money asks, man, are you using the Pitbull prop now too? Yes, for sure, 100%. Yep, that's what I'm trading here. So one of the things that I'd like to share with you guys. So obviously, so Danny Riley wanted to start. Wanted to give, share what we were doing and get other traders, bring value to other traders and kind of help them to go to get profitable. Okay. And one of the things that I kept arising was, while we were building the tech stack and developing the rules for the trader funding, one of the most important things to us was making sure that we were well capitalized, that we can make sure, the most important thing, guys, is that traders get paid, right? And we're not going to be the biggest shop. We're not looking for 15,000 traders. Looks like I'm going to get stopped on this shortly here. We're not looking for 10,000 traders. That's not why we built this. But what we are looking for is to develop high quality traders. And so one of the most important things for us was that we were well capitalized so that traders can get paid. And then the other thing that was really important to us was to make sure that we had education, that we could teach traders, not only give them the funding, but also help them trade and help them to trade well. Because too many of these funding companies, they'll give you the keys, they'll let you trade, but you know what? They don't really, they don't really show you how to do it. And it's kind of like, handing a 16-year-old, the keys to a Ferrari. All right, we're popping back up again. So big move up here. I'm wondering if that was a trap down there. We'll see. Wait, this is not right. Let me fix this. Okay, there we go. Now it's displaying properly. All right, guys, coming back down. Let's see what happens now. Let's see what happens. We're trading. We're deep into that wick. That was a kind of a raunchy retracement there. All right. Wait, this is 50. This should be 52. Looks like we're going to start chopping here a bit. Looks like we're going to start chopping here. Right back up. Yep. Right back up to test that 6150. Early signs of, we had a strong move up. It failed, and now we're coming back up to test highs again. Looks like we're going to start to chop here a little bit, at least probably for about another half an hour or so. Let's see. Take a look at our core sector list, see what our internals are doing. All right. So our sectors are kind of a tough read here. The weighted AD is positive, but man, look at that. Like all of the core sectors are, I mean, we have 1, 2, 3, 4, 5, 6, 7 sectors red, 4 green. But there's a divergence, right? Because our weighted is positive, but it is kind of coming in a little bit. I don't know. I guess we'll find out. Hang tight, guys. I have to go check on my kid real quick. All right, let me get the core sector list now. What do we trade? It's still trading 58 half, kind of chopping around over here. Let's see what the A4 is doing. Okay. All right, still hanging on here. Price just kind of chopping back and forth. We'll see if we'll see if we're going into the chop shop right now. Um, just trying to look around, see if there's anything that can kind of give me a lean one way or another. And I'm not really seeing anything. Nothing's really jumping out at me. Yeah. Wow, Tesla's down 4.25%. Yep. All right. Just got taken out of that one. So no harm, no foul on that. Just done. I gotta go check on my kid too. All right. So we had that first trade that worked out really well, and then that one got stopped out. All right, we just broke. Yeah, so that was a trap. So look, traps on both sides. So heads up, right? Choppy here. Um, we're right back to the highs. Right back to the highs. Just a heads up. I'm going to be joined by Rev here, our resident crude trader. He's going to be joining me here shortly to share. He's going to be joining us here in about the next 10 minutes. So hang tight. Look forward to that. To see. Let me just make sure I don't leave anything running here. Okay. All right, this all looks good. Hang tight.
First pullback. Take trade.
Looks like I froze here again. God dang it. Did I freeze? Yeah, I did. Yep. All right. Hang tight. Yeah, no, I just Ninja Trader froze on me again. It's been happening the last 2 days. I have to go run real quick to the other room and feed this kid. Be right back. Let me just get this launched before I go. Okay. All right. Hang tight. Be right back. All right. Hey, Rev is going to join us now. Let's go, Rev. The hell is that? Rev's going to join us any moment now, so hang tight for that. What the hell? Hey, there he is.
Hey, Manny, how you doing?
Good. How are you? Thanks for joining
Yeah.
us.
Oh, happy to be here, Manny. Thank you for having me. It's always an honor.
Yeah. So, guys, I'm sure you guys are familiar. Rev's our resident expert on crude oil, and he joined us today to give us his insights and maybe share some levels and what the trade might be here.
Yeah, well, I was thinking about what we were talking about last week, Manny, and we talked a little bit about how even in bull markets, you have drawdowns. And am I still on, by the way?
Yep, Yep, go right ahead. I just don't want to talk over you.
Yeah, no worries at all. So no sooner did we have, no sooner did we talk last week than, of course, going straight into an options expiry, which always creates drama. And if you had bought that dip, my, you've had a good week.
Right? Yeah.
Because at the end of the day, and we've talked about it here inside of our own community a lot, is that this is Operation Epic Jawbone going on right now, and and it's going to keep working until it doesn't. But at the end of the day, the boats still aren't flowing, and the thing is that the boats aren't going to start shipping oil until production comes back online, and production isn't going to come back online until there is some confidence in a durable peace or ceasefire or whatever you want to call it, because you can't just open and shut production like a tap. It just doesn't work like that. And so, but I was talking to a good friend of mine last night, and we started talking about, okay, it ain't the train you see coming that hits you. And so, everybody knows that, we've got a big oil crisis on our hands. And, what is the bearish case? And, and you can just, because you, Manny, are always very objective about, you may be all bulled up, but, at what level are you wrong? And, or all bared up, and what level are you wrong? And right now, clearly, I mean, that 80 to 115, 120 range is where crude kind of has found its happy place. Now, that is one hell of a range, but it's doing that over the course of any 5 to 10 day period. So, but what is the bear case? Well, one of the things, and a few of the guys and gals have posted in here about this more than once, is that you got to look back to historical, as they say, history doesn't repeat itself, but it often rhymes. Well, this could be one of those times. And one of those things is, what if Trump did what he did in 2018? It was a midterm year. And in the summer, the price of oil started going up and up and up until about August 30s and 40s, after Saudi Arabia decided to flood the world, when they got in a big fight with their OPEC members. What happened was, Trump he saw the price of oil rising in July, August, and didn't like that going into the midterms, of course. And so he went to Saudi Arabia and said, listen, we need you to start pumping a ton of oil, because we're about to embargo the daylights out of Iran, which is going to take several million barrels of oil off of the market. And so, so Saudi Arabia complied and started pumping oil like crazy and creating a lot of supply, because obviously they didn't want the prices to spike. Well, no sooner did they do that than the US issued all these backdoor waivers for Iranian crude, which actually kept the crude on the market. So Saudi Arabia kind of had egg on their face because they got sucked into it. Prices ended up in the 30s by the end of the year. Like, oil prices completely fell. If you look at the crude chart from 2018, from May until the end of the year, you can see exactly what I'm talking about. And the Saudis have not forgotten that. And this is not a group of people that don't forget about revenge on things, as if they've proven anything. And so them coming to the rescue this time, number one, I don't know how interested they would be, but number two, they physically can't get their crude out. Yes, they've got the East-West pipeline, but it's not as robust as their main facilities in the Gulf. So anyhow, where I'm going with this is that, it wouldn't surprise me, a possible scenario is Trump talking tough about Iran. Meanwhile, he's unfreezing assets, or telling them he's going to unfreeze assets, and, giving them what they need in such a way where he can declare victory and, drop everything, blame it on everybody else, and walk out. And it's a thin argument, but it wouldn't be unprecedented. Now, what the mechanics of that look like, I mean, we could sit and spend the next 2 hours talking about that, and all the holes in that story, because there are a lot of holes in it. But the point being is that, you got to give Trump his due in this regard. The guy is very creative at shifting people's perceptions and getting them to tilt the hologram and see something completely different, and so that is one bear case. So it goes right back to, what are we watching for? So two things. The first is, same thing as we talked about here on the Manny show last week, was that there's, the technical levels are like, if you didn't know what was going on, you would notice that the technical levels are all trading very much like they always have. And it's just that they seem to have a little turbocharging whenever they do make their swing moves, because, of a well-timed tweet, or a well-timed, post, or a well-timed, we all see it. The S&P futures are the same as well. But, if the levels are between, call it 80 and 120, why would they put out a tweet at 89 or at 102? Let it get stretched, then put out the tweet and get a whole bunch of bang for your buck, right? I mean, that's what's happening. And that's not an opinion. I mean, that's an observable fact, and it's repeating. And so you can still trade it like that. One of the other things is, yesterday, we had the EIA report come out yesterday, which has started to show inventory draws. And, we've been talking about this in the room for the last 2 months, is that, yes, all the production, we've got 20% of the world's energy complex is offline right now, or not being exported. But you don't see that show up in 15 minutes. It's kind of like when you max out your credit card, when you're in university, the bill doesn't come the next day. The bill comes the following month, right? There's a lag time in there where you think you're fine. And so that's kind of where we're at now, is that we're at that crossroads where reality is meeting hope. Next week, I think we're going to see a huge drawdown of inventories. The following week, even more. It's the May 8th one that I'm really keeping an eye on. Yesterday, we saw a record amount of crude exports and product exports, all time for the U.S., 2 weeks in a row. And that is really alarming, because the U.S. is more insulated. They are not inoculated, but they're more insulated from the immediacy of the energy shock. Because yes, they are the world's largest producer, but they are also the world's largest consumer. I mean, the U.S. consumes 20% of the world's crude oil. with only 400 million of the 8+ billion population.
What percentage does China consume?
13, I think. I gotta look that up actually. Sorry, Manny.
No, that's fine. That's
You're the
fine.
second biggest though, for sure.
Yeah,
But it's around that.
Okay. Yeah, that's what I figured. I figured it's got to be up there. But as they are kind of maybe, for lack of a better term, a little bit less reliant on cars and fertilizer, I would think that that makes sense that they're lower than us.
Well,
I don't know if
but it's also the industrialization part of it, right? So they're not, their economy isn't the same as the US's is. In some ways, it's more energy intensive. In many ways, it's not. But you're right about the EV thing. I mean, but you have to also look at how they create that electricity, and how they create that electricity is, still a ton of coal, still a ton of the petroleum, fossil fuel complex, right? It's not like it's all windmills and dandelions and, unicorn rainbows, right? Like it's, energy comes from somewhere. The other thing is that when you convert one energy source into another energy type, there's a huge efficiency loss there, right? So, if you put a gasoline generator, to run, an electric, power plant to refuel electric cars, that is actually less efficient than if you just use gasoline to power the car directly. So, and there's a lot of that in there that they do, but they also have the largest stockpile of crude. While crude is cheap, they have been building storage and buying storage like crazy the last few years. They've been very smart about that. So, they've got a huge SPR shock absorber.
What's the front month right now on crude? I just want to, could you
June.
June. CLM.
Yeah.
Okay,
CLM
make sure
26.
I'm looking at the right one. Okay. Yep. Okay. Perfect. Let me just see. Okay, just reviewing our notes from the last time we killed it. Sorry, I had a bit of a technical glitch here. I had to shut down. So, all right. So let's talk a little bit about, maybe give the viewers some trade ideas. What are you thinking up here?
Well, if you buy low and sell high, that's
awesome.
Yeah.
Thanks.
Yeah. One of the things that, the moving averages really still are a great tool. I mean, I wish I had, some Cirque du Soleil trade for you, but, when you've got these giant, when this giant average range that we're in, calls and puts are a great way to do it. I have a call spread on right now. That's my shoot the moon trade, as I call it, which is 215 to 245. So the thing is that if you look at it's very simple. My thesis is that 147 a barrel was the highest we ever had in summer of 2008. And if you do the math, that equates to about 225 today. So, wow. That's the sum total of the dollars. I think we are going to have to go to some sort of spiky price discovery. Just like this is kind of the inverse of COVID, when oil prices were falling in March of 2020, with Saudi and Russia getting into a fight over 360,000 lousy barrels a day. And so Saudi decided to flood the market right when COVID came in, and we were drowning in oil to the point where OPEC had to remove 10 million a day to try and balance the market, which took some time. The thing is that I think we're and it went to minus $37 a barrel. I think that, we very well could see the other side of that. That is one possibility, is that it's just going to get bid up until the futures markets break. Now, obviously, the administration is very alert to that. And if you think that they're just going to give crude, or even futures traders a free ride to the top floor, with nothing but upticks all the way there. I mean, I've got news for you. But Manny, you and I talked about this yesterday a little bit. Is that and a lot of people have been talking about this in our room. Is that all these guys that are mad that they missed the big S&P run that I'm looking at here, are thinking, well, if I wasn't long and I don't want to buy now, then I want to be short, and so they start shorting the heck out of it, kind of rage shorting it. And little do they know they're fueling the very rally they're trying to fight. And,
Yeah.
Right. And I think the same could happen for crude as well, is that, everybody starts to see that, wow, I've missed out on this. I'm going to start shorting it because at this level, that's what typically happens. But you have a different layout or landscape that you're trading against. And all of a sudden, all these shorts are actually, it takes very little spikes to blow them out. The price keeps rising. So then you have a combination of people chasing it and getting stopped out of their shorts, which fuels it higher again. So, I mean, that to me, and a blow off top seems to be the most likely scenario for this. Now, is it going to last a long time? Who knows? But we all, like, the same thing with silver. I mean, just blow off tops end the same way every single time. And, nobody thinks it can, which is why it is a blow off top. Otherwise, it wouldn't happen in the first place.
Yeah, that's interesting. So I'm looking at this little trend line here. It looks like there might be some support. I mean, I'm just a dumb technician, right? I don't have that insight, but it looks like 92.44, this little pivot low right here, could be a nice spot to maybe try some on the long side.
Yeah, you are not a dumb technician, Manny.
Yeah, no, I love to hear. So another more broad topic.
I see it the same way, though. Sorry, Manny.
Yeah,
I see it the same way.
What I was, so with given all that you said, right? Why is it? So, what do you think? Like, tinfoil hat moment, right? Why isn't crude higher? Because my theory is like, look, I think that there are powers that are vested in crude not spiking to $200, right? Both political, geopolitical, whatever. And so, do you think that those forces can keep those higher prices at bay?
It's the volleyball under the water, right? And I mean, the thing is that with crude, you got to remember there's two markets. There's a physical market and there's a paper market. And the physical market is at all-time highs. Dubai Light and Murban and all those, all those blends over there are have been in the 160s, and so that's the thing you got to remember, is that it's like the WTI contract is a barrel at Cushing, Oklahoma. Like, that's what people are trading when they're trading the WTI contract. A lot of these other ones, like Brent, is a basket of crudes, right? So that is way more reflective of the physical market, but it's also still there's a question here from Madge. We'll answer in a sec. The thing is that the physical market and paper market are in fact dislocated at some point, and so if you can keep that that spread wide enough for long enough for everything to resolve, we may not get it. But at the end of the day, I think that, and if they hadn't been able to keep it to like a month-long excursion, skirmish, brouhaha, whatever the word is, just don't call it war, then that might have worked. But we are way past the this isn't going to manifest itself on shore window. We're way past that. And so, as of yesterday, we started to see the big draws showing up, and the SPRs, both in the US and in Europe, yes, they've got hundreds of millions of barrels they can release on everybody, but the problem is they can only dribble it out 1 million or 2 a day. And yet our shortfall is anywhere from 10 to 13, depending on who you believe.
Wow.
So, it's simple math. If your expenses are, 13,000 a month and you're getting support of 2,500 a month, I mean, that's nice, but you're not going to go very long.
So give us an idea for this this call spread that you mentioned, right? What are the strikes there, and what's the time on it?
215, 245, keep rolling it.
Wow. So
Yeah.
what month are you in now?
July. Yeah, excuse me. Sorry.
That can pay off nicely on a spread.
Yeah, and I mean, let's be clear. This is not a base call. It's my shoot the moon trade that costs that, you know, it costs pennies to make that trade, right? Like,
Right.
so, and I think Billy was in here, who's a very smart guy and a great trader, you know, and just a great guy. He's one of the guys that really makes this community a lot of fun, quite frankly, and I enjoy interacting with him a lot. You know, he showed me a 150, 300 call spread for July 27. That's like a 300 to 1. And, you know, it looked like a complete moonshot when he sent it to me. But after some days, you start going, you can go from moonshot to here it is in a New York minute, you know, as a Yankees fan like yourself would know. So,
yeah, totally. For sure. Gosh, you know, I cringe to think, you know, what the what the economy would look like at 215 oil, man. You know, given you know the state of where we are right now, that's scary to think about.
yeah, it's a great point, but you know what? Let me help you sleep a little better at night. You know, the simple fact is, and I mean, it's the oldest trope in the world, so give me a break for repeating it. But I mean, the cure for high oil prices is high oil prices, right? And it's, you know, when you end up with demand destruction, which we are starting to see. I mean, Lufthansa just canceled 20,000 flights. You know, they see it coming, so they may be preempting that demand destruction, which means that demand never actually gets there, which does sorry, I just got distracted here. So you know, there's that, and you know, the other thing as well is that, you know, again, like I said, it ain't the train you see coming that hits you. And if everybody sees $300 oil coming or $200 oil coming, they're not just going to stand there on the tracks and get run over. They're going to change things. I mean, already, you know, I know you guys know I'm a car nerd, but you know, one of my buddies who sells cars has said, yeah, we've already seen people trading cars in for EVs. You know, right now they see the prices have come off a little bit at the pump, but they're like, I'm not playing this game anymore, where I don't know whether the station down the street's going to charge me $3 a gallon or $9 a gallon or sell me a double anchovy pizza. Like they can't live like that anymore, you know?
Yeah, I know. So I have a buddy who I've had a Tesla for a while now. And happily I'll say, you know, I haven't been to a gas station in regularly in like 10 years. But anyhow, that's not the point. My buddy was telling me he has a, you know, I think it's a pickup, right? I think Ford F-150. He said that he was at the pump. It was like 130 to fill it up. I was just blown away by that. And then another friend of mine who has a similar truck, like a Raptor, and he has some like extra tank in it. He told me that his went up as high as 175, and that's wild to think about. You know, just how much crude can affect people's monthly expenses. And I'm not sure if you heard yesterday, President Trump was like, oh, yeah, you know, crude oil's up peanuts. That's not peanuts. That's more like peanut farm.
Well, it depends on your basis for comparison, right? If you got $1 billion in the banks, that's, you know, sure. But,
yeah,
you know, I'm having a new garage built right now. And my contractor keeps telling me that. Luckily, we've got fixed locked in pricing and they're almost done. But you know, he's saying the same thing. You know, up here diesel is $2.25 a liter where I am, which is $10 a gallon roughly. So I mean, it's bananas. And you know, and it's funny when I hear all the governments yell and scream about, oh, we've got to do windfall profit taxes on these oil companies because of their crazy margins. Well, anywhere in the civilized world, if you take a look at the price of gasoline, the biggest taker of margin in that is government taxes. And so it's like, cool, if you're asking them to compress because we want to keep, prices low, what are you willing to do to take a little, a little off the table for the consumer? And the answer is usually never. In Canada, they actually just did that. They took off the federal excise tax on gasoline, which kind of blew me away. But anyhow, yeah, I know what you mean, Manny. Like I have a new M5, which is a plug-in hybrid, and you get about 35 or 40 miles. I'm doing the math, the kilometer, conversion math, and I mean for sure, I plug it in, it charges in an hour and a half, and 90% of my commutes are 100% electric. But if I want to go for a road trip and go visit you in Tampa, I still have a car that I can go on a long-term road trip with and don't have to worry about what if I can't find a charging station. So
Right.
I think you're going to see a lot of that.
Hey, let's see. Maybe you can get to Magister's question now. Magister asked, back during the last plunge, people were supposedly renting out their pools to store crude. What would be the kind of weird activity that might signal a crude top?
Is that I have a hard time believing that for all sorts of reasons.
Storing crude in their pools. That's
yeah.
Yeah. Are you? Did I read that right? Please tell me I didn't.
Well, you know what? Like
that's gotta be.
Well, rumors are just premature facts in the crude oil world. So nothing would surprise me. And Madge is a credible guy. So I don't know, but I think, oh, wow. Jeff Z72 in California, 260. It's just,
so that's that F-350.
$7. It's just like crazy. But anyhow, what signals a crude top is stuff like that. You really have to. Oh, sorry, did we lose me?
Nope, we got you. I think we lost you now. Yep, we did. All right, guys, we lost Rev. That's unfortunate because it's always fun to have Rev on. In any event. I'm not sure if you guys heard earlier that, okay, there he is, back. Good job. No worries.
But yeah, sorry, all I was just saying before, I don't know where I was when I got punted off, but in short, when you start, you have to reality test things, right? I mean, we're living in a world where people are doing very, very, working very hard to get us to see something other than what we're seeing. And so if you start seeing something crazy, that doesn't usually signal the end or the beginning of a new thing, of a new normal. It usually signals the end of something crazy going on. That is way more often the norm. So you can reality test that way, Madge. The other thing is just levels. If you see lots and lots of volume and it can't punch a level and it tries over and over again, there's probably a pretty good reason for that.
Wow. So Danny says, hi guys, I found landscapers are significantly changing their pricing and actually asking clients to be mindful they may need to scale.
Yep.
Wow. I mean, with oil prices being what they are and ICE being aggressive, there's a lot of things I get it. I totally get it.
Yeah. And I mean, it causes behavioral changes in yourself. One of the things, I talked with a school last year, and we were all talking about the whole, ecological side of it and then the practical side of it. And I just said really simply, try using 10% less fossil fuels in a week. Just try doing it for a week. 10%, that's it. If you're heating your home, use 10% less heat. If you're air conditioning your home, use 10%, set it 10% higher. Use 10% less gasoline in a week. Just everything you do consumes energy. So just back it off by a lousy stinking 10%. And, and you'll be surprised at how, how much just that alters, like how disjointed it is.
Wow. All right, guys. Hey, Rev. I'm not sure if you read that message, but guys, we're gonna have to cut a little bit short today, about 5 minutes short. I'm sorry. I have my kid is homesick from school, and she needs some attention right now. But thank you, everybody. Hey, for you guys watching
No
on
sweat.
YouTube.
We were done anyways, Mandy. So thank you for having me. I really appreciate it, and I enjoyed being on as always. And thanks to all your your community for asking me questions. And I really enjoy the interaction. And so thank you very much for having me, and happy to come back whenever you like.
Thanks, Rev. Appreciate it, guys. We're going to work on having Rev come on here once weekly, so look out for that. Again, if you're watching on YouTube, please hit that like button, hit the subscribe button, and we'll be back at it like here again tomorrow, as we are every weekday from 9 to 11.
All right, go to your dad first. That's most important.
Yeah, but let me go tend to my little one. She needs a little bit of attention. But thanks, guys. Thanks for tuning in. Appreciate the support.
Thank you.
Take care, guys. Bye.